Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, although we did get factory orders coming in at 2.7, higher than the expected 2.5. Now, the reason why that number isn't really that important is because it is a lagging indicator. Lagging indicators means it's more hindsight. These are the orders that people are placing, and we already got some of the forward-looking numbers in the form of PMI, Purchasing Managers Index, and that's the people that are actually inside of those manufacturing sectors, and they are buying raw goods in order to manufacture and produce the end result of those people coming in that get those factory orders. So that is why that is a lagging indicator. It's the ancillary coming in and buying from the factory that is already ramping up. So we'd rather look at the PMI numbers because that's how the manufacturing sector sees the outlook going forward. Factory orders has already happened, so it's behind us. It's a lagging indicator. So that's why those PMI numbers are so much more important and why I drill down on every single one of those. Anyway, going on for with the crude oil /CL down $1 today, and looking to test that $50 a barrel area. It tried to test that this morning, but has since pulled back and away from that, but still down $1 on the day as we speak. Then on to gold futures. Gold futures looked like they were going to be breaking down yesterday, but a late day rally brought them back into line where we're kind of starting to see it flag sideways, if you will, in a bit of a triangle pattern after we've seen it come off a little. But today, a real inside day, almost no movement whatsoever, despite the fact that it is down almost $3.50, as you can see from the chart here, just really inside yesterday's trading range. Looks like gold traders are taking a bit of a break today. And the bonds as well, pretty quiet day in there. Trading down 7 ticks on the day, but again, as you can see, just an inside day, this little doji, just not giving any indication whatsoever of a directional bias. Then onto the Dow Jones. Yesterday we talked about this, a new historical high intraday and a new historical high settlement for the Dow Jones, but we're giving back a little bit of ground today, down 21 ticks. On the NASDAQ again slightly down on the day, but at the end, we just haven't seen a whole lot of movement. NASDAQ very comfortable right here at the point of control, which is where the most time and volume's been spent. That's where traders are going to feel comfortable with their position, if you will. Then E-mini S&Ps down $1 on the day, as you can see, just across the board, just a really quiet day, not a whole lot to talk about. But the E-mini S&P is down on the day as well. This is the intraday chart of the E-mini S&Ps on 15-minute breakdown. As you can see, our value area high, value area low is inside of yesterday's, and our point of control is very close to where it was yesterday, just adding to that whole comfort zone, and traders aren't really making any moves today. Onto what I've done. Now, this is along the lines of the call diagonal I did a webinar on Friday. Looked to put this trade on. It just really wasn't working out yesterday. Today, I decided to put it on this morning as I started seeing it kind of push a little higher. And I went into the February and I bought the 45 calls, and then I sold the January 50 calls to help finance some of that extrinsic value, and I paid $3.62 for that. So that fit right in line with all of my rules that I talked about in that webinar. So you can check that out at protraderstrategies.com. I actually even went through breaking this trade down in that webinar and looked to put it on yesterday, but kind of got away from me, and then today decided to throw that on as it was looking pretty good. So I moved my calls up from the 44s to the 45s. Those 45 calls just were at a really wide market on it, so I moved that bid up, or that call strike up just a little bit, and it still fit in line with all those rules I talked about. So if you watch that webinar, you'll notice that I did look at the February 45 calls, and today decided to go up to in the webinar I talked about the 44 calls, and then today decided to do the 45 calls as it wasn't really working out yesterday. So that's about all I got for you on that front. Today, if you go to Tiger Shark Trading, I'm going to be doing Festival of Traders. I'm going to be talking about one of the most important metrics involved in options, and that's implied volatility. I'm going to talk about all the rules of how I implement that into my daily trading regimen. It is the first thing I look at on a daily basis, and it's the first thing I consider before putting in any trade whatsoever. All right, so go to tigersharktrading.com. Check out the Festival of Traders. That's going to be on today. I'm going to be on at 5:30 Eastern time, so you can adjust your time clocks for that. And then Friday, we're going to be doing a webinar on the put diagonal, and I'm going to be going through all the rules as to how to set that up. It's a great time to do it because we're just kind of coming out of earnings season, and this is a great way to set ourselves up for good trades going into the next earnings cycle. So that's why it's really important to start putting this strategy on at around this time. It's just the perfect time, the perfect implied volatility. So hopefully everything works out for that one. All right, that's all I got for you guys today. Hope to see you out the Tiger Shark Trading, and if not, join us for the webinar on Friday. If you can't take that, take it easy.